Welcome to the Capital Exchange. I'm Steve Wilbur, Managing Director at Allen Capital Group.
And I'm Travis Portwood, Chief Investment Officer with Allen Capital Group.
Over the last year, the market has acted in bizarre ways, Travis. Recently, with the Reddit frenzy and people having the fear of missing out with the euphoria of GameStop and some other ones going up. And then we had last March, the height of the pandemic, where people were getting scared out of the market because the market was cratering at that point in
Exact
time.
opposite.
Yeah. And so one of the tools that will help people stay invested and in these extreme market conditions is an investment policy statement. So let's talk about how that can help.
Yeah, traditionally, Steve, an investment policy statement is utilized by institutional type of investors, foundations and endowments, but they can be equally effective for families and individuals. And an IPS is simply, a framework or guidelines for the portfolio construction based on the client's objectives and constraints. And it also provides an anchor to refer back to during the times of market stress, like the COVID crisis and like the Reddit euphoria, to keep the investor grounded during those times.
Yeah, Travis, you'd mentioned the objectives, and in an investment policy statement, there's two objectives. The first one is to determine the risk a client is willing to take, and many advisors think they can have the client fill out a questionnaire and they're going to understand their risk. But it does really fall short, doesn't it?
It does fall short. The questionnaire is just a starting point. Yeah, it'll take additional conversations and additional observations about how the client reacts in different market environments. Putting all that together truly helps you understand the client's risk profile.
And the second is to determine the client's target rate of return that they need, which is generally the return over time that's going to help them reach their goals.
Right. Now, so you laid out the objectives, risk and return. The second main component of an investment policy statement are the constraints. The first constraint that I can think of is your time horizon. When are you going to need the money? And maybe you have multiple time horizons. For example, your son Eli is going to college in 3 years. You're going to invest that money in a different manner than your retirement funds, because again, you're not retiring for 80 more years, right? So another constraint to think about is your tax situation. Are you in a high tax bracket? Are you in a low tax bracket? Maybe you're in a high tax state or a low tax state. The answers to those questions will affect how you invest the money and the different investments we can use, on your behalf. And it also has an impact on where we might place certain types of investments. If you have different types of accounts that have different types of tax situations, so if you have an IRA, a Roth IRA, and maybe just a normal brokerage account, a taxable brokerage account, we would place different assets in the different types of accounts, based on the tax sensitivity of those accounts.
Yeah, another constraint that I can think of is legal. Understanding or being aware of the facts that you have in front of you. An example of this would be if a client had a special needs child, where you need to take into consideration what that child's going to need down the road, but also the client that you're working for as well. And another one is liquidity, just understanding the client's need for this money, when they're going to need access to it, how liquid do you have to keep that every single year to make sure they can get their hands on it when they need it.
Yeah, and liquidity, it might restrict going into some type of private investments that have lockup periods. If the client needs the money, you have to avoid those types of investments. So the last constraint we'll talk about today, Steve, is kind of a catch-all. It's if anything doesn't fit into the previous four constraints we discussed, it goes into the unique constraint. And an example of this might be a socially responsible mandate that the client has put on the portfolio, because that's the way they want to invest. That's how they feel about it personally. Or maybe you have an executive that has stock in the company that they can't sell for a certain time frame. You have to note that in the IPS so you're aware of it. But I think the biggest advantage is, if you go through the process of establishing an IPS or developing an IPS, you'll find the balance between your risk and return and the constraints. And in the end, you'll have a document, again, that you can refer back to and provide, it provides an anchor for you during the times of market stress during the times of market euphoria, it'll keep you level-headed.
Yeah, Travis, you're absolutely right. This has been great. I look forward to it next week.
I look forward to it as well.
If you'd like to learn how to develop your investment policy statement, our contact information is below, and we look forward to hearing from you.